Greetings. In the last market recap, for the market level analysis, I was not particularly bullish. This week, the USA market went up, at least as far as the major indexes are concerned. Was that the week when the Q analysis did not work? That is not true. It did work, and I will review that in today's session. A very good morning to you, or good evening, depending on where you are. I'm Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using the Q systems and techniques that I develop. The way I trade is to find truly high probability trades by combining technical analysis along with market analysis, sector industry rotation analysis, fundamental analysis, as well as seasonality analysis. Because I combine all these dimensions, as many of them as I can, with my trades direction, they tend to be truly high probability trades. And the proof is in the tweets that I share and also the YouTube videos that I post and the forum posts that I make. Good morning, Dr. Jeffrey. No update coming on market breadth. It is the same version as it is available on the download page now. And Dr. Jeffrey mentioned market breadth. That's a very powerful tool. I'll come Probably I'll start with that today, but let's go through the disclaimer first. This demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of options, standardized options from OCC to see if options trading is suitable for you. I use only Q systems for my trading. All the Q components run on Metastock platform and the technical analysis component runs on TradeStation as well. Why don't we start by looking at the market breadth, and this will be a good time to refer to a tweet on my Twitter page or X page now, Superior Profit. On January 19th, in the morning session 11 a.m., that is Friday, I shared an analysis of the internal health of the market and pointed to the Hindenburg warning that had come as of Thursday's close. Hindenburg is an ominous signal, that's why it looks like skull on the Q market breadth chart. Why it is ominous? Because no major market downturn has happened without an Hindenburg signal, a confirmed Hindenburg signal. Confirmations come in magenta color, the early warnings come in yellow color. Now, though major down moves come after Hindenburg, not all Hindenburgs lead to major down move. However, we don't need major down moves to take profitable swing trades in the short direction. We just need sufficient pullback to get profitable short trades. It worked last time the warning came, the last time the confirmation came, both of those instances. And as of Thursday's close, I noticed the Hindenburg alert came. Was Thursday a down day? Let's look at the market ETFs. Now I am mixing the market breadth, the internal health check, with the external view. QQQ. What did I say in the market recap 1 week ago? That time QQQ was around here, and what I mentioned is that a market ETF that is so close to previous high or maybe all-time high also has a tendency to go up against all odds if the odds are there and make a new all-time high. That indeed happened. What I expected QQQ to do, QQQ did, and it went up, made a what looks like a new all-time high, isn't it? Went up by more than 2%. Now, what happened on Thursday? This is Thursday's candle. QQQ had a gap up open, went up further. And that was the day when we had a Hindenburg alert. What would a normal trader do who did not study Hindenburg before? They would continue to buy as far as market direction is concerned, but I wouldn't because I have studied the Hindenburg. The alert is significant, and notice the alert came when the market was going up. The same thing happened here. It didn't come after the market decline. Didn't come after the market decline. Came right at the top. That's why this signal is very valuable. It is not a trade setup. Here we are looking at the market breadth. Then we may drill down into sector industries and further into stocks to look for trade setups. But at market breadth level, Thursday when the market was very bullish in at least several respects, I noticed it and I was not going to buy in general. What happened on Friday? I'll come back to the dollar chart later. As of Friday's close, what happened on Friday? Let's look at QQQ again. Sharply went up. Again a gap up open, a very solid up move beyond the gap up open, closing right at the very top. In fact, it looks like after market close, it went up by a little bit more as well. Futures trade a bit longer than the market, and the QQQ changes price as the futures move, the Nasdaq 100 futures move. So it seems like after the regular market close, if I'm reading it correctly, it went up further, closing at the very top of the week of the day. But what did come in the market breadth total view? A confirmed Hindenburg signal. That is a time to be very cautious, and I came to know about several of these signals from Dr. Jeffrey's videos. Thanks to Dr. Jeffrey for that. I have incorporated it firmly in my own trading technique, I may say. So I am not buying now. I was not buying last week also. There were exceptions. There are exceptions even today. But as far as general stocks are concerned, I am not going to buy now. When we are on this market breadth chart, let's see what growth did relative to value after long time, after a very long time. Growth outperformed. Several traders who follow investors.com IBD kind of traders or even HSI traders, they like to buy small cap growth. How did small cap do? Small cap did poorly. So small cap growth taken together did not do well. What did do well then? Large cap growth. So probably mega caps did well. Let's look at the mega cap custom index chart and look at it using weekly daily. It looks like mega cap custom index also made a new all-time high. No wonder QQQ did that and SPY did the same. What about the other two market ETFs? I'm switching back and forth between Q Global on Metastock and Q Elite on TradeStation. You could use only one of them, Metastock. Let's look at Dia. Dia also went up, in fact closed above the watermark resistance in daily, therefore on a closing basis it made a new all-time high. Very bullish all throughout. However, under the hood we can see the relative performance quite sharply, not just tilting down, quite sharply tilting down. That is, it is considerably underperforming SPY and QQQ. Why it is so? I explained in the previous market recap and few other recaps also. One reason could be, I'm hypothesizing, is because mega caps are leading the market up. Not all stocks are participating. We'll probably look into that later furthermore today. Dia is not influenced by mega caps. It did join the other stocks, but a feeble up move. Practically it is moving sideways since the bearish headwind came and it is underperforming. And small cap, we already saw from the market breadth chart, small cap is underperforming. Therefore, we expect IWM to underperform. Relative performance is showing that. We also see that the trend line support held, and last week in the market recap, and this is a good practice to look back on what we analyzed last week. How did they play out? Last week when price was here, I mentioned that it is the weakest one, but it is already enough below the recent swing high. I was not going to short. Another reason, the major other reason I didn't want to short, was because the trend line support was nearby. And interestingly, once again the trend line support held. Now it is right near the tip of the triangle pattern. I am not going to trade unless it can break out in either direction. I think it is more likely it will break down than up, but I will trade whichever direction it moves. Why do I anticipate it to move down? Is because market is at all-time high as far as DIA, QQQ, SPY are concerned, but not all stocks are participating. Let's look at one graph that I shared in the previous market recap. Again, looking back, in the last market recap, I shared the sector industry stock advanced decline breadth, and I showed that the 5-month period was neutral and then it weakened. It could go either way. I was expecting it to go down. What did happen this week? This week is now closed. This is from previous week's market recap. 5-day period was neutral. Let's look at Q edge as of today. Look at the 5-day period. It is actually bearish, more bearish than it was 1 week ago. Where is the bullishness over 5-day period that is present in SPY, QQQ, and to a much lesser extent in DIA? It is not there. So under the hood, the market in fact weakened. Yes, over 2 days and 1 day it went up, but 5-day, these 2 days, Thursday, Friday's move in the sectors, industry stocks were not enough to turn the week bullish. It is bearish, and relative to 1 week ago also, it is bearish. That clearly shows that under the hood participation is not there. Now is the time to go back to the market breadth chart once again. The market breadth chart has many signals and I explained how to use it in the masterclass videos. Where are the masterclass videos again? On my YouTube channel, Trading Profitably. If you now scroll down, all the masterclass videos are here. And there I explained that normally I'm using the daily interval to study the market breadth chart. But for some of the signals, we get additional insight by changing it to weekly, the longer term interval. And that weekly interval is useful to see if there is a divergence. It should be bearish divergence because market is at the very top, for advanced decline and up down volume for these two signals. And there was a bearish divergence until the very last day probably of the week. Then it went up again. It is still showing bearish divergence because relative to where it was here, this is weekly chart, the Q Global Market Custom Index went up considerably, but the advanced decline up down volume did not. For the bearish divergence to be confirmed now, we need it to tilt down, of course, because unless it tilts down, we don't know whether we have reached the peak. We need it to tilt down to confirm our observation that it may have a bearish divergence. And I'm not going to go into the Nasdaq NYSE individual breadth charts. If you open those, you would see that the bearish divergence formation, what appears to be bearish divergence, may be confirmed next week, is there in both NYSE and Nasdaq. Close this. Let's look at technical breadth also. The weekly charts of SPY QQQ relatively less dia are very strong, but the weekly technical breadth is bullish, but not as bullish as represented by those market ETFs. So again, this is also a kind of breadth inside, technical breadth inside. It is not reflecting the bullishness in the QQQ and SPY. That is a reason to be cautious. Friday, of course, was very bullish. There may be buying opportunities. Remember, there were several sectors, at least one I can think of. Let's go back to Twitter again. On the Twitter, I refer to one forum post, HP, on Friday. Let's access the forum post. I mentioned energy sector that was going down. If I go to the forum from my website superiorprofit.co, I posted one analysis under the 360-degree stock ideas category of a stock in the energy sector, and this was during market hours. Let's see what I shared, and we'll see later how it closed. The stock was HP, and this is the 360 degrees analysis that I shared. Oil and gas drilling industry was weak. Sorry, not weak. It was up as of that time. What time? 1:25 p.m. Eastern Standard Time, New York time. So just after midday, I observed that oil and gas drilling was up. The pace column, which shows acceleration, was showing that it is starting to accelerate. It was weak for a long time. In fact, it was the worst performing industry of all industries over 2-month and 3-month periods, and now it strengthened a lot. It is not one of the strongest industries, but that is fine. Q allows us to buy in a strong industry or an accelerating industry. It was an accelerating industry, and I buy 360-degree trades, try to align as many forces as I can. I looked at its fundamentals. HP, undervalued stock with high earnings growth. So it is a 3-star buying candidate, earnings quality robust, and that was necessary for me because earnings is nearby end of this month of January. The company makes money, it pays a dividend also of 3% dividend yield. Notice that the industry in itself was not strong. So the sector was weak for a long time. Energy sector is weak even today. However, this industry turned bullish, and it turned bullish because of some stocks like HP. That caught my attention, and I looked at the technical chart. The weekly had a bullish indecision cluster. Daily had a bullish indecision cluster here and once again here, and it had a bullish headwind also at price extreme low. This is as of around midday. This is what I shared, and there was no confirmed buy setup. I mentioned that also in the post, but I suggested keeping an eye on the stock. Let's see how HP closed. HP in fact closed higher than when I shared it on my forum and tweeted about that as well. It is giving a breakout buy setup now. If I go to Finder, it is there on Metastock as well as TradeStation. We can see for HP on Friday it is up by 1.1%, whereas oil ETF USO was down on Friday by minus 0.3%. So HP is doing better. And what I always say, what is general wisdom also? If a stock starts to go up before the industry goes up or before the key commodity in the industry goes up, that stock is stronger than peer stocks, and HP seemed to be one such stock. It gave a breakout buy setup at price extreme low. I in fact took a small position in HP based on the breakout, and I noticed the bullish headwind. I noticed the dividend yield also. Now let's look at two more stocks I discussed in the previous market recap. One was United Airlines. This is important for me and I think for everybody to see how the analysis played out. Last week I explained this huge drop in United Airlines due to, I think, Delta Airlines earnings report, which was not well received. UAL's earnings was not out. It is not out even today. If we look at the template with historical trend lines, I noticed that there was a trend line support nearby. This is as of last week's market recap. And I mentioned that if the trend line support holds and if we have a bounce long setup, I would be happy to buy UAL probably with short put vertical to avoid any risk associated with earnings. But the bounce setup did not materialize, so one would not try to attempt that. I did take a short put trade, not vertical, it was a short put trade at this swing low, but that was using intraday chart. I had some profit at the close of Thursday. When Friday I saw market was going up, but UAL was not going up and earnings was nearby. It was a naked short put position. I closed the trade with a small profit. Think 10% to 15% profit on a short put position. That is a small profit. That was, you can say, a day trade or 2-day trade. That was not a swing trade because there was no swing trade setup. So UAL, I kept an eye, but it was not to be taken as a swing trade. The other stock I mentioned in the last market recap, and this is the kind of stock I am more inclined to buy now because of their dividend yield. I'll not go into the detailed analysis, but I mentioned that I bought peak on this day because not only Q gave a flow buy setup. If I go to the momentum chart, again used by Dr. Jeffrey, on that day we had many green dots, 1 2 3 4 green dots. So I took a position on peak at that time. It pulled back, but it is holding the trend line support, so I didn't exit the trade. In fact, I bought it knowing that it had, and it has high dividend yield, high enough for me. So I am not planning to stop out on the stock if it also goes down. That comes to how you implement your strategy, and the strategy is to be decided before taking the trade. And peak was not the only dividend paying real estate investment trust that I bought. I bought several such stocks and I'm holding all of them. I'm holding them as stocks. If they also start to go down, I will collect the dividend, and also I plan to sell very long expiry calls on them, making the effective dividend yield, if you may call that dividend yield, also the income from the long-term expiry calls, that will be much more than what I get in my fixed deposit account. So I don't mind that. And that is the kind of stock I am holding now, the high dividend yield stocks, with the strategy in mind that I will hold them, I will not stop out, and I may sell out of the money longer term calls to make the effective income much more than the dividend yield percentage. And another kind of stocks I'm looking to buy are stocks like HP, the energy sector stocks. If we go back to QH, and you can see again, I have no specific format for these sessions. I just share what I see in the market. Let's look at the sector scorecard. Energy is here. It is not number one anymore. Number one is the worst performer, that is now consumer staples. Second one is utilities. Third one is healthcare. All the defensive sectors are now down. Energy improved from number one. It was number one here. Now it improved a bit and it is showing acceleration. So energy sector languished for a long time. Just now it is starting to go up. That is a turnaround candidate for sector. So I'm interested in that. We could drill down into the industries. We can see, other than the last one, oil and gas exploration and production, other than that bottom one, everything else is showing acceleration. Several of them are up on Friday except one. But based on the acceleration, we could now drill down into the stocks and look for buying candidates. Now I showed HP and I declared I took a position in the stock also. HP is still in a downtrend and now it just broke out of a trend line resistance. I am happy to buy stocks in a downtrend if I have fundamental strength, in this case some dividend yield also, and also industry strength. Though I like to buy stocks in downtrend as turnaround candidates, I am equally happy to buy stocks in an uptrend already. Now I mentioned when discussing HP that HP did much better than oil, and even in sector peers, industry peers, I showed the sector peer graph. I showed the industry peer graphs. Most of the industry peers were down, but HP was up. So a stock that does better than peers, better than the commodity involved, better than the sector industry, that is stronger, even if it is in a downtrend and breaking out of the downtrend. But if we go further, HP, this is HP, let's say this is HP. If we take the same logic, what about a stock that is already in an uptrend and gave me a buy setup here in energy sector, that would be even stronger than HP. And such a stock I traded. I'm going to show that now. I didn't share that earlier, but it's more important as a technique. A turnaround candidate like HP is very tradable, quite profitable overall, as good as a trend following trade. A trend following trade in the current market in energy sector is not easy to come by. But I did find a stock like that and I bought that also. It has gone up very little. Let's look at the stock. Tide Water Incorporation. Oh, my sound was not on. Sorry. I'm very sorry about that. What I wanted to mention, I don't know when the sound went off. Sorry about that. What I was trying to mention that I bought HP, that is a breakout candidate in a downtrend, but in the same industry I found a stock TDW, Tidewater, not industry, same sector, energy sector, that is actually in an uptrend. It gave a flow long setup on Wednesday and it might have given a pullback long setup also, as it pulled back to yellow direction line, went up from there. Before that it hit jump thrust low, created higher low, went up, orderly pullback, went up again. Right at the point it confirmed the setup. Technically I bought the stock. So I have a very small profit in the stock. So Tidewater TDW is another energy sector stock that I am holding, and I showed its fundamentals also. Funds seem to be accumulating. Insiders are also bullish. So notice the kind of stocks I am buying. I am looking for the sector that was languishing and now showing acceleration, energy sector, looking for strong stocks in terms of fundamentals with a proper technical setup. So I bought two of them and I'm holding several high dividend yield stocks as well. What is the bucket analysis saying? If we look at the distribution of QH, that is S&P 1500 stock across their respective Bollinger Bands, interesting, isn't it? I am doing it live. This is as of Friday. The market overall was very bullish. However, that was not enough to turn the bucket analysis to bullish. Still 63% of the stocks are below mid Bollinger Band. That is not showing the bullishness that is there in QQQ SPY. So we can see from many angles that broad market is not participating in the bullishness. However, I am not suggesting shorting any stock. The mega caps and after that QQQ and SPY influence the market a lot. When they are going up so strongly, I am happy to wait to short. It will not go up forever. More so now that Hindenburgs have appeared, a confirmed Hindenburg has also come on Q market bread. I think sooner than later market will pull back. I'm not thinking it is going to crash, and I never actually try to think what will happen 2 months from now, 1 year from now. I'm looking to swing trade, buy at swing lows and short at swing highs using daily chart. So if I have a swing high, I'm going to short. But am I going to short QQQ or am I going to short IWM? As of today's charts, if IWM breaks down, I am happier to short IWM. We'll see what happens on Monday, but that is the usual practice I follow. Short the weakest one, buy into the strongest one. What will happen next week, whether IWM will remain the weakest one, we'll see that in real time using Q systems. Now, because of not being willing to short right now and not willing to buy other than in energy sector or high dividend yield stocks, I don't know if I need to go into many technical setups, but one thing I may do, let's see on the weekly interval using technical break, are there stocks touching trendline resistance? And I found 3, but out of them, Hello, this one, okay, the ticker is actually Momo, that is already at price extreme low. So I'm not thinking of shorting that. See, even before I open the chart, and this is weekly interval, I'm trying to see what possibilities I have. So I have 2 other stocks that are touching trendline resistance. They are at price extreme middle. So they are shortable very much. Not that Momo could not be shorted, we could look at that also, but I would prefer to short stocks that are at price extreme high or middle. They are both touching trendline resistance. One has bearish momentum, one has a breakdown also. Momo also has a breakdown. Okay, well, so let's look at all these 3 stocks touching trendline resistance. but that was in weekly. I'm trying to look for stocks touching longer term trend line resistance, and then I may watch for the daily to give a trade setup. Well, Halozyme is right at trend line support in daily. If I look at it using weekly daily, what I searched for was stocks touching trend line resistance in weekly. That's why this one came. Very effective, by the way, these trend lines. And I notice now it is in a triangle pattern, and we have a bearish shape, bearish color weekly candle. Therefore, I would think that there is more likelihood of the stock going down. And if that going down happens, if it breaks below these daily trend line supports and therefore the weekly trend line support, I'm happy to short it, but I will probably not short it using daily time frame because recent swing high is a bit high for me. I will try to short it using intraday time frame. As far as typical swing trades that I take, I'm not going to short it because daily swing high is a bit higher. That's why I am not very fond of breakout or breakdown trades. I'm very careful about them. So let's close this. This may still go into a watch list. Why don't we also look at its fundamentals? Halozyme, let Q Vital calculate the score, and I will come back to that later. Let me continue with the technicals. Momo, this ticker symbol is Momo. This I am not going to short because approaching jump thrust low, already very far from swing high, and it is not in a breakdown condition also. I'm not going to short a stock that is already down so much. I could have shorted using this flow short setup on this day, but not now. Close this. This one looks more attractive immediately. Let's look at it using weekly daily. This one I like. The weekly is bearish in shape, color. There is no strength at all in the stock. Nothing that is visible in QQQ, SPY, DIA. Not even as strong as IWM. Very much underperforming. And it is good that the stock went up considerably from this low. Incidentally, the low came at jump thrust low, at price extreme low. Then came a big move up 3, a pattern that I have seen so far never failed in stocks with 360-degree setup. So this big move up 3 after jump thrust low, price extreme low, lead to a considerable rally. We also had bullish indecision cluster before the rally, and at the very top came a bearish headwind. Price did not go above the high of that day. That high created a watermark resistance and then also a trend line resistance, two of them. Price is now creating lower high, lower low coming down. If we follow the Q techniques, when was the last short date? This one, the flow short setup. I am always looking to buy swing low, looking to short swing high. That was the perfect short day for me. Not today, in fact. So yes, it has a short setup, but it is already below lower boundary. If I short it, I will next week. If I want to short it, I will change to intraday time frame and use fine tune precision entry chart to short so that my risk is not so much. Maybe I could put stop just above the high of Friday's candle. But let's look at fundamentals and industry score also. This is MTZ, but let's go back to not this. Hello, okay. This was the other stock that I was considering shorting based on technicals, but after I look at the fundamental, see how I am combining all the dimensions. After looking at the valuation and the fund accumulation, I have decided not to short it. So hello, I'm not going to short, even though technically it was somewhat promising. Okay, let's go back to MTZ. MTZ, this stock MTZ. This one is better in terms of shorting. Let it retrieve the data for all the parts, then I will look at it. Sometimes if the data is not retrieved from Refinitiv, no data is stored here, we may stop and replay again. That will send the request to retrieve data again from Refinitiv, as I did, so that the peer stocks came back, and now we are retrieving data about the peer stocks. Well, this stock I am more willing to short in terms of fundamentals, because I see funds are not accumulating, there is no earnings data, there is no dividend yield. The industry is in itself strong. However, this stock is very weak. If you see 1-day percentage change, 2-day, 5-day, 10-day, it's consistently red coming down. Let's look at its relative strength also from QH. Instantly, I know this is an industry I am happy to short. One of the weakest industries and also one of the most decelerating industries. With the market being so much up, on Friday the industry was down also. Not only the relative score and acceleration score are weak, in fact the industry was down on a very bullish day. The stock was even more down than that. So based on this few minutes that I spent, if I had to choose any shorting candidate, I would choose MTC, but as I mentioned, I am not going to short it using daily chart probably. We could keep an eye on this stock. This is MTC. Let me add it. Delete the earlier stocks from last week. Why I am saying I am not very happy to short using daily interval is because it is already below lower boundary. If I was tracking regularly, this should be my shorting day. That already hit the profit target. However, looking at its weakness relative to the market, relative to the industry, I am happy to keep an eye on this. Now, because the industry itself was showing weakness, this is another thing I do. Before deciding on MTZ, I see if other stocks were down in the same industry. And we can instantly see that MTZ was the weakest. MTZ was the weakest. We can see from the percentage change. The weakest one I like to short, but there were few other stocks in the peer group that were down. So let's look at that. PRIM, the ticker comes at the top. PRIM. It was down on Friday, but no setup. I'm not going to short it. I'm not going to buy it. Why? Because the industry is relatively weak and it was down industry also on Friday. No question of buying in a weak industry, but I cannot short a stock that has trend line support nearby. So cancel that. GVA, too much down from the recent swing high. I'm not going to short it. Close it. ROAD, also having a trend line support. If this support breaks, I'll be happy to look for shorting, but I don't have to add it to watch list for that. When it breaks, it will confirm a breakdown setup. I'll see it in Finder anyway. So close that. Same for FLR, not going to short because there are many trend line supports. STRL, this I am more willing to add to watch list. I think that was the last one. Let's look at it using weekly daily. Yes. See, the market was very high. Even Dia was high. This is, I think this is a construction, meaning industrial stock, isn't it? Yes, industrial sector stock. Dia was up for the week, but the stock was down for the week. It is right above trend line support. If it breaks down from that, I am happy to short it because my stop will be very narrow. So in fact, in terms of daily chart, the swing trades that I usually take, this has the lowest risk entry opportunity if it breaks down. So STRL, before adding it to my watch list, I would like to look at its fundamentals. STRL. Let's create the one page scorecard. I'm not going to look at many more stocks after that, so I can spend some time. Well, fundamentals are not weak. It has high earnings growth, funds are accumulating. But one thing also I not know, and you know, that funds data don't change immediately. So it is okay to look for shorting opportunities while the fund accumulation is still showing bullishness, because they don't update. They would not like us to know every time when they are starting to sell. Fundamentally, it is not so weak, and that brings me to the exception that I always share, that I use 360 degrees technique. It has multiple dimensions, at least three, sometimes four. The three key ones are market, industry, fundamental. Sorry, four at least. Market, industry, fundamental, technical. These four I always look at, sometimes look at seasonality, and only one of them I am willing to ignore, and that is fundamentals, and that is also for the short side. On the long side, I don't ignore, because we have plenty of opportunities to buy at market low or industry turnaround low, like in energy sector stocks now. But when the industry is turning around, fundamental may not change immediately. Fundamental data comes out only once in a quarter. That is the logic I use, that I am okay to short a stock ignoring only one dimension of the four. Again, the four being market, industry, fundamental, technical. I can only ignore the fundamentals for shorting. That is the exception that I would like to apply to STRL. Fundamental is not weak for the stock, but I am happy to short it because the other dimensions are okay. Again, for bullish trades, I don't ignore fundamentals. For bearish trades, I am okay to do that. So let me add that also. Technically, this is the stock I find with lowest risk opportunity if it breaks down below the trend line support next week. So I added both these stocks to my list. Market is of course the most important dimension. If market continues to go up, I will wait. I am not in a hurry to short these stocks or any other stock for that matter. But as I mentioned, I am very reluctant to buy every stock. I am holding and looking to buy either high dividend yield stocks or turnaround sector stocks, which so far I looked at energy, but again I'm doing it live. When I looked at the sector scorecard, I noticed, what did I notice? Let's look at that. The weakest sectors are currently not energy, it is consumer staples, utilities, healthcare. And if we look back, they are actually weak for a long time. So if the market goes down, I'm not going to buy stocks in the sectors that were bullish, but I will see if the stocks in consumer staples, utilities, maybe healthcare, less healthcare, because I'm not healthcare expert, they move even without known events like earnings based on their drugs approval data, drugs reporting, etc. I am not master of that, so I would like to focus on consumer staples, utility stock if the sector starts to outperform. Currently they are underperforming. That's the kind of stocks I am looking to buy now. I am almost at 1 hour point. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend. And as I always say, as this live session show, there is no reason not to do that. Trade profitably. Thank you.